Well, here we're looking at Great Panther Silver. This is one that's done rather well, and it's we did see the overall market start to show some potential weakness here as we were seeing really gold and silver backing off a little bit on the day. And I just thought it made sense based upon what we were looking at to really start to take profits on some of these. Now, this is one that is up 32% where we exited out at the open. So we locked in a 32% gain in it. That was from September 15th. So, we didn't even get a full month in there. And so I think that's a pretty good return. And I mean, I've had some, sometimes, very rarely, not often, but I've had an email or two, and people wonder why, we trade some of these stocks at these prices, and or why aren't we trading some of the regular other stocks that people know, Boeing or whatever. And people need to understand too that what we advertise and what we say we do is that our consistent trades are very profitable. We try to minimize your down exposure. If you look at our trading history, you could see through our trading history that, we've had very minimal losses. I mean, if you look at 2013, our loss was a 24% loss. That was the highest loss out of all these trades. I mean, we did over about 110 trades. So that's not bad. We had one that was a 63% loss in 2014, but we had 209% winner on that. You know what I mean? So it really offset it. Plus a 63% loss, even though it was very high, it's not 100% of somebody's portfolio, which is always very, very important. But what I try to explain here is, and so far we're up about 800% on the year, even including losers. And our highest gain was 80% this year, and a loss of 20%. So, we try to minimize the downside. That's the whole point of it. And so even though they're risky, of course they're risky. You're not going to get 30% in a month, or 15 days or 7 days in a JP Morgan, or J&J. Every once in a while maybe, but that doesn't happen. So I mean, I don't know. Sometimes I wonder what people's expectations always surprise me, because they sometimes have a real false understanding of how it really works. You cannot get these kind of returns in just, in a short amount of time on just any kind of stock. You have to be very careful, very selective, and it's a double-edged sword, of course. Somebody said, well, there's a lot of risk. Of course there's risk. You're not going to get these kind of returns without risk, but risks are associated with any kind of stock. That doesn't matter, because, people have had to, go tell that to people who had WorldCom, Lehman Brothers, for that matter, or you understand what I'm getting at. Anyway, this is why sometimes a lot of times we look at these stocks. I'm not, at one time I used to never look at any of these at a lower price, but to me, if they're going to go up, why should I ignore them? I mean, I remember watching a couple of these that were lower price, and they were doubling, and I'm saying, well, why am I not, what I saw that, but I just didn't want to tell anyone because I thought that they wouldn't want to buy it. But what's the point of that? I think the whole point, though, is to be very, very careful to the downside. There's always those situations that it can come out against you. But I think if you look at our track record, we pretty much speak for ourselves. And you know what? Everybody can say what they want, but you look at the trade history, that speaks for itself. So anyway, I was pretty happy with this return, and so far what we've been doing this year. And I just wanted to kind of come out and mention that.